Here we go. All right, looks like we're live. How's everybody doing? All right, so we got about a minute to go before the rate announcement, and the world is holding its breath because we don't know if we're getting a 25 or 50 basis point cut. And that's really been the first time in a long time where we've had, basically a coin flip on the decision. Usually at this point, the probabilities are locked in and everyone has a pretty good idea. Right now, we don't know. So we're going to find out here in about 30 seconds. So let's see what we get. Can
Hey
I
guys,
get
I will
a
be looking at the
confirmation you
camera
guys can
because I'm
hear
looking at
everything
a
okay?
bigger screen. What's that?
Can you guys hear us okay in the chat?
Yeah, let me see here. I'm looking at chat here.
Okay, thanks. All right.
Just so you know, I'll be looking at the screen. I'll be looking at a
All
bigger
right, so
screen.
the announcement is out. Here's the initial reaction. We got Bitcoin in the middle here. So this first initial reaction, there's not much to glean from it. You're going to just get the algo reactions. And I'm just waiting to see what the initial rate cut was. I'm going to guess maybe 50 basis points considering what this is doing. And then we're going to talk about the implications of that a little bit. But nice push up here at Bitcoin and the markets. So 50 basis points to 5%. It was an 11-1 vote, so mostly everyone agreed Bowman was the one dissenting Fed governor. So there you go. Now, here's the thing. 50 basis points. If you guys caught the podcast the other day, that's very bearish for the economy. So I'm now getting more into the camp of we're going to get a blow off move, and then we'll see basically us rolling over into recession in 2025. Quarter basis point cut has very good returns over the next 1, 2, and 3 years. 50 basis point, not so much. Pretty negative.
Hey,
Basically a bear market.
hey, Phil, you have the 19, 20, 24 chart up, not the live chart.
I'm sorry?
Looks like you have a static chart up there.
Oh yeah. There you go.
Yeah, thanks, Anthony.
To actually go back to that, we have, those are your scenarios. So we're going to go over this in tomorrow's podcast, but I think you might get a mixture of both those scenarios, blow off and a pullback. But we'll talk about that more on Thursday. So in the short term, guys, what I think we'll see, obviously the markets are liking the fact that, we're getting a half point cut. I'm getting extreme volatility signals now. So watch for a reversal here on Bitcoin. If Bitcoin loses these lows that we put in earlier today, we're probably rolling back over. What I'm going to do, we'll flip through some charts as things kind of develop here. Now, what we could see is, now we just made new all-time highs, right? So based on the S&P 500, or actually, I take that back. We broke previous all-time highs. Here's the all-time high. 57.78. We didn't quite get up there. We did clear this double top here, but we didn't get back to these levels here. Let me just lock this in on the exact high there. Okay, so on the new futures contract, 57.8225 is the all-time high. Our previous all-time high level was here. Let's see what we get. Pulling back in quite a bit. So what I like to do is I like to mark off where the announcement is. And then we'll make this black. We'll make the line black. Text over to the right. Okay. So that's our announcement. I got different moving averages that we look at. Daily 5 EMA, daily 9 EMA. On a really strong trend, the daily 5 EMA will typically hold the pullbacks. If you're in that, environment like this type of move here, that's a good moving average to catch a dip on. Right now, the way this is playing out on the 30-minute chart, and we still have a ways to go, but this would be a bit of a swing failure here over this previous swing high that we put in the other day. But 50 basis points is, to me, very bearish. Now, I'm not talking about in the near term. I still think, this market, we may see a pullback now after OPEX on Friday and go down for a couple of weeks. I think then you're going to have a pretty strong rally into the election. And then how we play out from the election is going to be the big question mark. If we break new all-time highs after the election, we're probably going into the final blow off. And then I'm going to target like 6,100 to 6,400 SPX myself. So the biggest question for me will be, do we hold up in this area into Friday at least? Now, probably the simplest thing you can do is just look at where the announcement level was, which is right at 5,700. Probably not a coincidence, round number, right? So if we start trading below that, then you might have the sell the news event. Because remember, we've ran up, right? We've ran up. If you look at the 4-hour chart here, this really just V reversal, right? Another V reversal similar to this one we had back in August. So August had a sharp dump, and then we just retraced the entire thing. So we erased that entire pullback that started at the beginning of September, right? And pulled back. And this is actually kind of seasonal. September will hold a range like this, up and down. It's what happens right about here, where September tends to pull back. We would probably take out 54, 55 of seasonalities play out, and could potentially challenge these lows that we saw as well. I think we would probably, if I'm guessing, we're gonna have a date. If we do the seasonal pullback toward the end of the month, we'll probably have a date with the daily 200 SMA, maybe even the weekly 50. I think we might hold a higher low. Like this low would hold. So the ultimate low on that was what, 51.81 on the futures. So we would probably hold that. But I think this low is not safe. This 54.56. I don't think that's safe. All right, so we're holding up pretty good. I think that these previous all-time highs is an important level to hold over. So if that's the case, this could grind up into the press conference, which is going to be in about 20 minutes, 23 minutes. Let's see how the other markets are doing here.
Yeah, Phil, ES is stalled, but I'm watching NVIDIA, and NVIDIA keeps trying to make a new high after the Fed announcement. So the boys are pushing it pretty hard at the moment.
Yeah, Bitcoin is going to be very, very erratic through all of this.
Now it's pulling back.
So if we go down to the 1-minute chart, This is essentially your reaction range. So you got a 50% retrace. If this is going to go back up, this should hold and challenge these highs. If not, we take this low out, probably go back to the announcement. And that would not be great if you're a bull. You generally want to see this stuff hold up above, hold the 50%. If we take the reaction range low out, that wouldn't be good either. And this is the initial, because the initial reaction is typically, okay, it's like that's where your playground is, and then you're looking for breaks either way. As we get into the press conference at 2:30, this is where that move is more important, whether or not we break the high or the low of the range. Right now, a lot of this is algos and market makers reconciling that initial reaction. Hedges are coming off. Initial hedges are coming off. We're in a positive gamma environment, so if this was a negative gamma environment, we were getting this announcement, we'd have even larger moves than what we're seeing here. But positive gamma tends to add more padding to the books, to the order books, so the moves are more dampened, if you will.
Hey, Knockstars TV. Remember in the 70s we had a lot of liquidity too, and it went all into commodities and came out of the stock market. So or it can come all out of the stock market and go into the bond market. So you just have to make sure you're in the asset class where the liquidity wants to push. Just because you have a lot of it doesn't mean you can use it.
So while we wait, kind of bigger picture here, this is a little indicator we whipped up, and this basically only lights up when you're like in late business cycle, or the final part of a bull market. And when it lights up, you generally can be pretty bullish. But when it rolls back over, and in this example, the green histogram disappears, you're going to want to be getting defensive. Now, it doesn't mean sometimes the markets will immediately roll over. Other times they can linger around for a little bit, but we're getting a signal here on the weekly, which is pretty significant. So if we do not break out to new all-time highs, and I mean really break out in October to November, then you have to potentially start bracing for maybe the scenario like we had in 07, where that's it. We would just roll over, and we potentially are seeing the all-time highs happen here in the last quarter or two.
Gold looks good, Phil.
And we wouldn't remotely look to get long until we start seeing the market bottom histogram light up, which is also, this is based on the debt markets, right? Because the bond markets are the smartest. They know when it's time to leave equities. They know when it's time to get back into equities. That's what this is modeled around. So the fact that we were all, printing green this whole time, and now this sharp drop off, which is typically what you see as it signals that it's time to get out of the market. So we're close. We're within a quarter, I would say, but I'm going to give this market some leeway with the election and everything like that. You can have one more push up. VWAP charts are helpful and I think the most important range right now has been the quarterly VWAP. We've really not been able to get any kind of closes on the higher time frames. The daily has failed to get over this, our current VWAP range high, which is one standard deviation over the VWAP for the quarter, right? So there's a 3-month VWAP, and that level is 5706.75. So really, if this market's going to push up after the announcement, I'd want to see that level hold, and it's failing to do so. So we'll keep an eye on this. Our net liquidity, which is in blue, has been pushing up pretty aggressively. A lot of that has to do with the reverse repo balance dropping, which is positive liquidity, right? If they're not parking money in reverse repo, they're putting it to work in the market. So we've had a risk on signal here for a few days after this risk off that preceded that nasty dump. And but what we have to watch now is seasonality kicks in, because after September 16th, when you have your business taxes come in, right? Corporate taxes, they come in to the Treasury General account after the 16th. So that if the Treasury General account starts building, that's actually negative net liquidity for the market. So this could actually pull back down and even trigger a risk off signal, which would play into the seasonality into basically a pullback into the end of the month. So we'll be keeping tabs on that. This is the yield curve chart. We've gone positive with the yield curve. So now we get into that window where from 0 to 0.6% is essentially your last gasp for the markets. They'll tend to hold up pretty well, but once you crack 0.6 on the yield curve normalizing, going positive, 0.6 typically in the past has coincided with the market rolling over. So that's why I'm open to the market continuing to, even though some of the macro signals are saying, hey, it's time to probably look for the exit, you still can have a couple more months of up because of this. So once this hits 0.6 and unemployment rates climbing higher, you'd have to be very defensive at that point. TLT SPX, so TLT is the ETF for the 20-year Treasury. It's an important ratio chart, because once this starts to break out and get bullish, that's usually signaling that the big money is leaving equities and piling into the safety of bonds. And we're looking for essentially this trend line to break. Okay, so once we get a big decisive green candle on this ratio chart, I think that's also a confirmation that you have a major market top in place. All right, so we came all the way back down to the announcement, right? And that we bounced, didn't take out the range low. So now this market's going to probably hold and just essentially consolidate ahead of the press conference at 2:30, and then we'll see. That's where we're going to get more headlines. Right now, there's not much in the way of headlines. So again, we got a 50 basis point cut, nearly unanimous vote. Bowman was the one Fed governor that dissented, probably for a 25 basis point cut. And what does that mean? I think, ultimately at the end of the day, the Fed has a couple of mandates. Employment's a big one. And I just think that, they're looking at the employment chart and they're seeing it's another classic pre-recession setup, right? You have a rounded bottom and it's going up. I'll try to see if I can bring that up here. Let's see. Maybe it's initial claims. Initial claims is the only thing really that's not gone totally recessionary on us, but it's getting closer. If we look at the unrate on this chart, you see how we're getting these rounded bottoms, and and then RSI I like just plotting the economic indicators with. And we're getting another confirmation. So if you're just looking at this is telling us that a recession is on its way, right? It's done. You're getting the cross, you're getting a rounded bottom on unemployment. And this in my opinion, is why we got the 50 basis point rate cut. Just because of this, because it's just lined up with every other. These are all recessions. If you look at, if I turn on recessions, I can't turn on recessions for some reason, but you would see that it'd be lighting up at each of these intervals. This recession indicator shows recession probabilities at 50%. It's lighting up here. There we go. Something wrong with that other indicator, but this is highlighting US recessions. So you see rounded bottom, RSI crosses 50, recession, right? That's just over and over and over again. Here, COVID, I don't really count COVID because that was just such a weird thing, and they just immediately printed like $2 trillion to which I think was actually a banking crisis underlying that they masked over, but that wasn't a typical like business cycle move. This is a typical business cycle move. I think we were getting there, and I think their banking sector was having a huge issue that didn't really come to a head. And I think they used COVID as a means to print their way out of that problem, and without everybody freaking out about it. But now everybody's freaking out because you got inflation and all that good stuff. So, but as you guys can see, I think this is the primary driver. So anyway, you guys can see, it'd be a matter of time before we get another green shaded area when it comes to unemployment. But initial claims, like I said, that's the one where we don't have quite the indicator that we're looking for. We're just not there yet. 354,000 or 55,000, that's the level I'm looking for in initial claims. And I suspect we will see that over the coming months. So everything else we look at pretty much is lined up for, recession. Yield curve, all that stuff. Initial claims is the one holdout. So keep an eye on that. Let's get back to the charts here. Okay, so this is why I like marking off these previous all-time highs, because they tend to be reactionary. But now we've got a range. So we'll see now we got 8 more minutes until the FOMC presser. And we'll see what Mr. Jerome has to say. And I'll call out the the kind of the headlines off of what he says. So Fed cuts by 50 basis points. So the Fed funds rates are now down to 5%. This is the first cut since March 2020. Their dot plots, which is what they use to project their cuts, is actually looking at another 50 basis points of rate cuts in 2024. So we could see a couple more, which takes us down to 4.5% Fed funds rate. And the official said risks to employment and the inflation goals are now in balance. So again, that's why they're looking at the unemployment starting to creep up. The Fed statement said that they were strongly committed to supporting max employment and 2% inflation. So I think that's the main driver. I think that basically that's telegraphing to you guys that, unemployment rate's going to continue to rise.
Yeah, I'm not too sure. Why Max I'm more interested in than why Mag. Why Mag is the Mag 7. And I think in this sell-off, tech's going to take the biggest hit. I think we're going to rotate from tech into commodities. So that's kind of my view. Although they now pay weekly, so it helps you manage it better. But I'd have Y Max over Y Mag any day of the week at this point.
This is a little matrix of when your first rate cut is 25 versus 50. We talked about this in the podcast the other day. If you guys aren't subscribed to our podcast, if you don't mind, hit subscribe and turn on the notifications. But notice the returns: 1 year, 2 year, 3 year, right? Horrible on a 50 basis point cut. And why? Because when the Fed cuts 50, they're bracing for impact. When the Fed cuts 50, they're not looking for a soft landing, right? That's a hard landing, move your seats to the upright position. It's coming in hard. So that's really important. That's why that was the biggest thing out of today, was whether or not we got either or, and we got the bear market scenario today. So, but it won't be in a straight line. We can make new all-time highs first. But I think going forward after today, if we lose 5,700, then you have to get defensive, in my opinion, because then we're moving into Friday OPEX, and we're moving into post OPEX, which is where, if we're going to pull back, that's the first week after OPEX, and the second week after OPEX is the softest time in the market for that, because the hedges just came off of OPEX, and those hedges typically are going to corral price, right? It's going to give us either a tailwind or a headwind, and those kind of go away. So the market, can drop in those scenarios. And then you got seasonality on top of that as well. That's fairly negative for the back half of September. And that's going to affect crypto as well. Right now for me on Bitcoin, 59,800 level is kind of key. If we start losing that here in the next few hours, I think you have to get a little defensive on Bitcoin or crypto or alts if you're in those short term. If you're long term, I think you play for the fourth quarter pump to look for a long term exit on those. But short term, if you're trading on leverage and things like that, I'm just keeping an eye on this 59,800 level. Is my kind of line in the sand. I got Wolf over here. If these markets start to roll over, we might have to take a short-term exit on Wolf. It's been a great performer. We're up, over 100% on that trade. We saw as high as 300%. Since pulled back. It's been consolidating in this area. But if if the markets all start to roll over, we could certainly see, retest of this wick low down here. I know there's a lot of institutional volume right in this 4 to 450 range. So it's no surprise that this is kind of the spot where we've been consolidating and basing. But, I have this range kind of highlighted here. And if we start falling out of this range low here, this range low area at 375, I think you have to brace for more downside. We could potentially even round trip this entire pump going into the end of September, which would take us back down to near our entry on that. So I don't really want to suffer through that. But at the same time, you can't really sit here and watch it lose this range, right? We've stabbed it like 3 times, this range low. And this area here was a deviation outside of that. And we kind of expected, I was calling that, I was like, watch this, head fake lower and pop back up. Now, normally, I'd want to see when you get that move, you get everybody trapped, you expect to get back to the top of the range. I don't know that we can do that unless we rally and ignore seasonality into the end of the month. And I just think that's a tall order right now for these markets. But if OPEX or after OPEX next week, if markets hold up and don't really give us that big of a pullback, then we might dodge a bullet. But that's not my lean. I'm just gonna keep an open mind, but my lean would be that we pull back. If we pull back and we hold a higher low, we don't get back to those market lows we saw in August, that's really bullish, because I think then we can gun for new all-time highs from that lower location. So it looks like we are stuck in a range between the middle of the reaction range, which is this dash line, and the previous all-time high. So we're just kind of chopping in there. And Jerome Powell should get on the mic here in a little bit and scare the children. Okay, he is speaking right now. So let's see what the headlines are. Powell says economy is strong overall. Thanks, Uncle Jerome. I mean, if you look in terms of GDP, yeah, but they're talking out both sides of their mouth, because if the economy was strong, right, we wouldn't be talking about a rate cut. He's looking in the rearview mirror. So we're just watching this previous all-time high here area. Start busting above that, you can look to get a push back up to the top of the box there. Ed, I would say not yet. I think, when I think there's going to be, there's a saying, market generated information, right? MGI. And we kind of need to see, I think, what happens in the next 2 weeks, and then also the reaction. So if we pull back in the next 2 weeks, then, do we get the bounce for Bitcoin? Like, for example, seasonality, September or October 1 on, pretty consistent. If you're going to go up, October 1 on is usually fairly bullish. So, and that can lead the markets as well. So if we see that behavior, then, for me, then it's like, okay, new all-time highs, and then a final blow-off move is on deck for into December, potentially even into the inauguration. If the bullish run happens and we get past the election and things are still bidding, then you look to the inauguration as a potential top, in my opinion. Yeah, Adam's Electric Universe. You got that right. These guys are just nothing but word salads. Yeah, so markets are starting to push up here. All right, so Jerome Powell says market conditions continue to cool. The economy is strong. Our projections show we expect GDP growth to remain solid. Unemployment rate has moved up, remains low. Labor market conditions have continued to cool, which has been a notable step down from earlier this year. The labor market is not a source of elevated inflationary pressures. Inflation has eased notably, but remains above our goal. Labor market is not a source. No, never mind. I said that already. Indicators suggest labor market is now less tight than just before the pandemic. This is all about the labor market. 50 basis point cut also, means the GDP should start to contract over the next couple of quarters. We're getting big positive ticks coming into the market, so the buy programs are running. A lot of this is algo related. If we look at our markets, Bitcoin's squeezing back up higher here. So if you look at the Bitcoin chart, we're getting into this area. This is just a little supply zone that I highlighted from back to the left of the chart, and you can see it's acting as resistance. So really we need to clear the top of this rectangle at 61,233. If we do that, then this thing might get some legs. But notice they're just trapping up here right now. Let me go to a 15-minute chart. And it looks like we got a double top now here. I love a lot of double topping in this market lately. So that's our double top there. This initial move yesterday wasn't that great because we did not close the deal above these other highs that we had from previous, and that's what we call a swing failure. So yesterday's daily candle close on Bitcoin wasn't that great, and so if they're going to negate that, then you're going to want to see a higher time frame close, like a 12-hour or a daily close up here. Whether or not we get that today, I have no idea, because right now this is the important stuff, the press conference and how they react to it. So let's go back to this chart. So not good losing the previous all-time high. Now we're breaking below the mid-range. That's also not good. So these algos are just, I think every sentence he's saying is having a pretty meaningful impact right now. Getting another extreme volatility reversal on Bitcoin, which is why that's probably pulling back in now. When you get extreme vol signals, really high vol readings, the algos will typically retreat because it's unsustainable. And let's see what other headlines we got out of the word salad machine. Longer-term inflation expectations appear well anchored. Powell says they're acutely aware high inflation poses significant hardship. Downside risks to employment have increased. Upside inflation risks have diminished. And I think that's right. But the inflation, if you look at core PCE, which is the one that really matters to them, we need to be back down inside the 1% to 2% box on that. And if we're not there, they're not going to ease. They're not going to step back in and start buying treasuries, okay? Because that has to get back to that level to reset the inflationary pressures. Once that happens, they can get back to easing. But if you think, they're just going to print when the going gets tough this time around, I don't think that's going to be the case. I think they're going to want to see core PCE firmly retreat back into those levels before they start doing that again. Powell says we're not on any preset course. We will go meeting by meeting on our rate decisions. Our projections are not a plan nor a decision. We'll adjust the policy as necessary. So in terms of why the 50 basis point cut, he said we're committed to maintaining our economy's strength. The economy remains solid and inflation, he said if the economy remains solid and inflation persists, we can dial back policy more slowly. Also want to know if they're going to make mention of any, right, they got the balance sheet roll off, whether or not they're going to address that here, whether they're going to increase it or decrease it. Our policy is well positioned to deal with risks. If the labor market deteriorates, we can respond. I think that's already begun, and they have already responded. All right, so we're just in like the chop machine right now. So I don't see a decisive move yet. Just some pretty, what I would call somewhat violent chop here, right? Because we're going from 15 or 57.13 up to 57.40. I mean, these are pretty large ranges here on a 1 minute chart, right? These 1 minute candles are huge. 10-point candles on a 1 minute, really big ranges. So I don't know, maybe if we don't get out of this box by the end of the press conference, then when we do start breaking one side or the other, that's probably the overall direction for the short term. And if we start breaking lower, that's, to me, starts smelling more like a, sell the news event. Powell on the 50 basis point cut. This decision reflects our growing confidence that, with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in the context of moderate growth and inflation moving sustainably down to 2%. I think this is going to be kind of important here, whether we start trading back below the announcement level and breaking down this lower box, right? Because now we're in the press conference time here, and if the market reaction starts going negative, especially if we maintain that at the end of the press conference, that's going to be a concern.
Yeah, NVIDIA and MicroStrategy are weakening too.
These lines down here, this greenish one is, I think it's the hourly 34, and this red one is the hourly 55 EMA. And after dipping below that, we've been holding over those levels. The next one we haven't really tested yet in a while is the daily 5 EMA. That's down at 56.69. So if we do start breaking down, I'm going to watch for a reaction down here. This is the developing daily value, but the daily value as of yesterday is going to be 56.69.50. Powell says we can go quicker or slower or pause on rate cuts if appropriate. The projections from the Fed are a baseline projection. Actual things we do depend on how the economy evolves. Median year-end projection based on their Fed funds dot plots is basically a Fed fund rate at 4.38%. Oil closed slightly down. Bitcoin's banging its head on the 100 EMA daily, which is at 60,737. That's another key level that matters on the Bitcoin chart. And you want to see if price is going to continue to grind up. We definitely want to recapture that level. So that's 60,000, about 60,750 approximately. The dollar has gotten weaker off the announcement. So dollar pressure for the price of Bitcoin, because it's positive, but we're not seeing an overwhelming amount of Coinbase premium, right? Coinbase premium right now is negative, and that's not very good. You want to see Coinbase premium positive. And when you have Coinbase premium positive and DXY pressure is positive for the price of Bitcoin, you can't really be short. But right now we kind of a mixed bag where dollar reaction is positive for Bitcoin, but we're just not seeing the spot buying that we want to see on Coinbase right now. So it's a little indecisive here. Now, if Coinbase premium starts to turn up and the markets are turning up or breaking out of the FOMC range reaction, if we're breaking out of those highs, then I think you have to go long. And even if that only means going long on a Friday. So now we're getting negative ticks, right? Negative 800 tick. So algos are kind of, they're on the ant trail, right? Just chasing the ant trail up and down right now. Powell says, when asked about closeness of decision, there was good discussion. We took all of those things into consideration, went into the blackout and thought about what to do and concluded this was the right thing for the economy and for the people that we serve. There's nothing that would suggest we're in a rush to do anything. When they went into the blackout period, which is when they hunker down and huddle up, they still were not decided on the rate cut, whether 25 or 50. But there was broad support for 50 as they met. So once again, the hourly 55, hourly 34 EMA holding on these pullbacks. Getting another volatility reversal on Bitcoin. If I was to characterize the price action here, I'd say non-committal. We're going to start leaning long. We want to start seeing price grind up on ES anyway over this 57.30 area, right? We want to be over this double top, and we're not able to clear that right now. If we do roll over into September, I suspect we'll lose the 20-day moving average, which is down here at 56.45. Probably challenge the bottom of this Bollinger Band. The heat indicator, daily heat indicator, is not overheated or anything like that. So there's still certainly room to run to the upside. But when that starts to get overheated, that's when we're going to have to start, like, when you get these conditions here, you start seeing the red lines. That's what you got to start watching out. That's what happened going into the end of November 2021. We got this top. So we could see something very similar. But so far, the daily heat is not at those extremes where we would look for that. So from a technical perspective, this market can still go higher. This, my friends, is textbook chop. Higher high, lower low, just all over the place. To me, this low here is meaningful to hold, right? Because this was your dump, right? Just straight down dump. They came in and bid it to hold the announcement price. And we're holding above that now. So this is a key spot. If we start losing that, then I think this market's going to be bracing for lower. Powell says that he was pleased they did 50 basis points. Economy is in good shape. We want to keep it there. We don't think we're behind the curve. They're behind the curve. And, I think that's by design, actually. You have to keep in mind, too, they're not going to say, like, if they're behind the curve, they're just not going to say they're behind the curve, right? That's not, the markets don't want to see the central bank look like they lack confidence. So you kind of have to read between the lines on what he says, because everything's so sensitive to what comes out of his mouth. They have to really design how they express what they want to express in a certain way, so the algos in these markets don't just freak out, because the way they have these markets levered up, things get really slippery really quick. Powell said no one should look at today and think this is the new pace. Well, we'll see about that. But I do think that you could definitely see it a couple, the next couple of cuts are quarter basis points. Now, if the economy is rolling over and the stock market is rolling over and we're not getting that Q4 move and, top is in, then you're probably going to see another 50 basis points. And that, my friends, is going to be code for the Fed's panicking. All right, so we're still chopping around. So now that we're, probably 3/4 of the way through the press conference, now we're starting to firm up here, right? So if we do start losing this announcement range, that's going to be a bit of a concern. I think you have to get defensive. So that would be today's reaction. Tomorrow's reaction will may counter this a little bit. By the third day, on Friday, I think you're going to have confirmation on which way this market's going for the end of the month. Still failing to get over that previous all-time high here. Or this double top, I should say. So we got positive ticks coming back in. So this market is just sloshing all over the place. Right now, it's just reactions off of what he's saying. So once he's done, we should start to see a sustained move. So let's see here. Powell says retail sales in Q2 GDP indicate an economy growing at a solid pace, which will also support the labor market. I would argue that the GDP numbers are more a reflection of the just insane amount of debt that we're doling out, right? Because as you expand your debt, right, that gets into the GDP, because that money, right, that you're getting from issuing so much debt, right, is eventually it makes its way into the economy. Government spends, that all filters into the economy. So you're sitting there, spending like drunken sailors in Washington. That's going to expand GDP. But really, what we want is a strong, solid, small business engine, right? That's really a good sign of a strong economy, and that's just not the case. So, I think it's a big illusion here on the GDP number. Powell says we're not seeing rising layoffs from our business contacts. I think that's a bit of a BS statement, because obviously you're seeing the unemployment rate rise. True, the initial claims is somewhat muted relative to what you would expect to start seeing in a recessionary environment. But I just think that that's kind of, you know, I don't think that's very genuine. So we want to see this pop over this previous weekly high. I misspoke earlier. I had this labeled as previous all-time high. I meant to say previous weekly high. So back to the quarterly VWAP, you know, we're starting to, this is what you want to see. If you're bullish, you want to see this start to get some higher time frame closes over this level, right? We just have not really seen that. And this is just your deviation bands over the actual quarterly VWAP, which is down here at 55.8750. So when we came off the bottom of that band and started cracking through the VWAP, you know, if you get the newsletter, we said this opens this range back up. I didn't think we'd get there in 3 days, but we did. And so now it becomes a matter of breaking out and starting to get acceptance over this level, get acceptance over these highs. If so, then we can look to attack the all-time highs up here now on the new contract is 57.81. This is a back-adjusted chart. And if you get above that, you can start gunning for the 2 deviation reading above VWAP, which is up at 58.30. But I would say if they're going to make a move like that, you better, and the call wall is up here too, right? So the call wall is kind of, you know, a lot of times this market will chase the call wall, and the call wall kept moving up higher and higher. That's just basically like your hedge wall for, and it kind of acts like a magnet. So if the call wall keeps moving up higher, you can expect the markets to continue to grind up. So it's stopped up here at 58.30, and you know, who knows, maybe this market squeezes up there into Friday. It's totally possible. But if we start trading lower again, below the announcement level, below the range low of that announcement, then I think you have to be very defensive. So we're just, right now it's hard to say because we're just in the middle of this box here, and the market needs to show us the money. Show us the hand. What's going to be? T-dubs, I don't know. I think he's running he's running a washing machine somewhere. Three little birds. Yeah, you know, yeah, I do. I think, you know, kind of a miracle the way that came about. But I think at the end of the day, it's going to be continued to be used as a hedge against inflation. So yeah, Ponzi, that's the interesting part about this cycle is that the Federal Reserve, right, and the Treasury seem to be at odds in terms of how they're trying. You know, Fed wants to get inflation down. I think that's true, but Yellen also, you know, they're trying to prop things up as we head into this election. And you can tell too because she went nuts with the short-term treasury stuff, which was very abnormal, right? The amount of short-term treasuries, right, was very abnormal. Now that matters because they treat that as almost like just dollars because it's so short-term they can collateralize it like money versus long-term bonds. They can't do that. The market, you know, markets won't accept that as collateral for short-term trading. So she juiced the markets. So I think they were at odds with the Fed in that regard. Cucumber, yeah. I'm not surprised. I'm not surprised. You raise rates, you got home prices extremely high, consumer is getting choked off, right? Unemployment's rising. Doesn't surprise me that you haven't been writing home loans.
Look, we ran up already into this, Phil. It's amazing. They just can't keep pushing it. No matter what Powell says, he can't lift it.
Yeah, so if you yeah, there's obviously this previous weekly high now is obviously got resistance here. So now if we break above that, I would say you probably have a good shot at taking out this range high. Still, we're just consolidating in this area, so it's really a coin flip. I couldn't tell you guys either way, but if we do start a move now below the announcement level, I think you have to be careful there. You have to watch out for an end of day sell off.
Yeah, Nvidia and MicroStrategy. I'm just watching the high beta boys here. They're giving up the ghost here. Still above the open though. Open from the Fed announcement.
Yeah. I mean, all as of right this second, right? If you're like, okay, what's happening? All we're doing is we're banging previous weekly high and announcement level, previous weekly high and announcement level. So you have to assume that's going to continue until it doesn't, right? That's all you can do. Do I want to buy this here? No. I'm in
No.
observation mode. You know, I like to participate when I think things are behaving. You know, this is a little too much volatility. It's too easy to just get a quick loss if you're trying to take a short term like day trade on this stuff. Is this the better spot for a long? Absolutely. You know, but you got to keep your
SPY is dead flat.
yeah. You got to keep your risk tight in these environments. But this isn't looking good for the bulls.
No.
Oh, that's not good. So we just took out the low of the initial back test, which that's never really good unless they're just going to do a quick liquidity grab. If that's the case, this needs to reverse quickly here and get right back above this announcement level. And we're just not seeing that here right now. So this is looking ugly, right? This has to jump up here really quick like that. Got to keep going. Otherwise, this announcement level turns into resistance, and then we start heading lower, and then you got to start thinking about getting defensive. Now, I will say that until he's done talking, you know, that there's, you know, a possibility that we're not done gyrating.
Well, Japan speaks tonight, so we'll see. We'll see what the yen says tonight.
Yeah, that's gonna be really a dollar thing too, right? DXY is gonna move off of that.
Yeah.
Tim L, you know, that's gonna initiate from October to November, right? So that pre-election move, it's not really here. Here is more about, do we sell off into the end of the month as seasonality would suggest? If we start seeing net liquidity roll over, right, then yeah, I think it's going to definitely help with that. Yeah, thanks, Ponzi. Thanks for tuning in. Bruce is back. Bruce posted, Bob.
You know why? Because the market's going red.
Bearish Bruce. I'm going to make a cabbage or a garbage pail kid card for him. Bearish Bruce. Who here remembers garbage pail kids?
Yeah. I do too, Tim. I'm more bearish than Phil is.
I found one for Bob. It's called Busted Bob. Body parts everywhere.
I sent that over to Lebanon.
Is that too soon? Oh boy. Yeah, it's a little interesting here. Yeah, we're getting at that's what they're trying to hold this, right? They're doing what they need to do because this is really important. But if all we're doing is coming back up on the 1 minute chart and back testing the announcement level and it's not getting a breakout through it, right? Because if you look on the 1 minute chart, right, stall, stall, stall. So they're trying to push back up over it and they can't. So there's a big player here right now holding this down. Maybe they're trying to get this market to break lower. So this is a really, really key spot here, guys. Bust out the popcorn.
So Nvidia's back to the announcement low. MicroStrategy is the same. Market needs both those to be higher.
Exactly, Tim. Yep, exactly right.
TLT
right.
just broke 100.
Powell says we're not declaring victory on inflation. Yeah, they're not going to do that. You gotta, if you guys, you can chart core PCE in your trading view, and if you do, you can draw a box between 1% and 2% on that, and you can go back in time, and you can compare that to the Fed funds rate, and you'll notice. I'll try to pull that chart up, but it'll be very obvious that they are not going to do any kind of QE until that gets back to that level. So in terms of their statements on inflation, I do believe what they say because of that. We understand it'll take some time for lower market rents to filter through. That's what Powell said on rents.
My Nvidia puts them lit up.
Powell still speaking. Let me see if I can find that core PCE chart.
Nvidia's giving up the ghost, Phil.
All right, so we actually poked the announcement low by a tick or two here, down here, right there. So that was either grab some liquidity or we're rolling over. Not good.
Nvidia is weaker than SPY.
You actually have to start looking at hedging if this starts to go.
MVDS TLT is where you want to be. TLT is pulling back a little bit today because sell the news for it, but sell off news very, very shallow. Wow. Beautiful.
Yeah. So, again, you see the reaction there on the announcement. And to me, you can glean on days like this with volatility very high and very important message being sent out to the markets. A lot of information can be gleaned even on the 1 minute chart. So I don't know if it was they were just trying to push that down to take this low out, right? That was your range reaction low, just to take that low out, grab that liquidity and come back up. So the way I look at it would be this: if we start getting acceptance below the range reaction low, which means we start seeing like 5 minute closes and 15-minute closes below that, you're starting to get acceptance below that level. At this point, for things to, I would say, get saved and any chance of bouncing back up higher, you're going to have to get over this announcement level. Me and Bob were talking about this yesterday, and it's like, with all the chaos and noise and chop, what do the best gauge is to just look at, are we trading above or below that announcement level? And that can even be a thing days later, right? If you lose it and then you start coming back above it and recapture it a day or two later, okay, well then they just reverse the move and you need to go long, and vice versa. If they're breaking out higher and then in a day or two we start cracking below that announcement level, you have to get hedged to the downside. So that's a very important level, and you carry that forward too, because if you lose it, let's just say like in August, we lost the previous FOMC announcement level. And when we came back up to it, it was resistance there for a little bit. We broke over it, obviously, because we had this big run up, but these levels are key going forward. So you want to always mark those off. And to further that point, if you're doing it on a futures chart, I think the futures level still matters, but there is some decay. So the actual announcement level You can mark that off on the SPX chart, and that won't move. You just have to, I go back and forth between SPX and futures just because I want to see where the actual spot value of key places are. But the futures chart, even the back adjusted chart, which floats around, the premium on that will start off at like, this month starts off at like 60 something points over spot is SPX, and that shrinks over time. That's a little bonus too in the bear market, right? If you hold short on the futures or the micros, even if you were, let's just say we're in a bear market and you caught a short and you held that thing for the better part of a quarter, you can take advantage of that premium reduction on top of your position. So, premium reduces by, let's say, 60 points because the volatility was high and the contract, that quarterly contract came out with a 60-point premium. So on top of the bear market drop, you get another 60 points of premium shrinkage that also goes in your pocket when you're being short the futures. But that's, that's rare instances, right? You have to be kind of in a bear market to really take advantage of that type of premium reduction. Because most of the time, right, we're in a bull market. Market goes up.
Phil, Nvidia is breaking the morning open.
I'm sorry?
The morning low. Nvidia now broke below the morning low.
Yeah. All right, let's look. Let's see what's going on here. Yeah, Wolf was up at 437. We're trading down to 408. Bitcoin's holding up pretty decently, though, actually. For Bitcoin to start looking as bearish as ES and MicroStrategies, we would be cracking below 59,194. Here's our bull bear line at 59.8 approximately, and that's, if we start losing that at this point, then I think you have to start looking at getting hedged. But again, hard to say exactly the direction here until we start seeing acceptance lower below this range reaction low. Because right now, all it looks like is they just took the low, which is what this market loves to do, right? Take a low or a high and then reverse, right? And that's exactly what we're getting. So now we're either going to back test the announcement area again and fail, or we're going to crack back above it and we're going to squeeze back up and recapture, into this range. So we just took out that resistance that we saw here, right? Just taking that out here. A positive tick. So market's just reacting to every other sentence that he's saying, right? That's the gig right now. Powell says we may well have cut rates in July, but didn't. We might well have cut rates in July, but we didn't. If we had the data, the jobs data at that point. So, just reiterating the fact that really this comes down to job deterioration, which is why you got the 50 basis point cut. And it's significant too, because they're obviously very concerned because, there's a big implications for an initial cut of 50 basis points. I personally think, and we've talked about this on the podcast, they kind of want to see a recession at some level to reset this inflation. Because if, you don't want your legacy that you stoked inflation and you made quality of life for everyone suck, right? If that's, you don't want that on your gravestone. So I think they're going to welcome some recession, a little bit of deflation. All right, so here's a squeeze, right? You were going to be hedged to the downside because of this price action, but they've come back up, so you take those hedges off, and that's why you get some of these extreme moves back the other way, right? Because below the announcement low, you have to brace for market rolling over, back over it. Okay, that negates that, and then you're back directional the other way. And that's why I said you can't throw in the towel down here just yet because of the way they took that low, right? We didn't get any closes below the announcement low. So that's why it's important to box that out. Because if you're just looking at the chart, you're going like, oh, this thing's toast. But ES is a very trappy instrument, right? Trap bears, boom, reverse. What about gold? We can look at gold. Gold does pretty well in a recessionary environment, but like anything else, it gets dragged down. Yeah, gold, very volatile move, right? Very volatile move. It had a Darth Maul up and down, right? Gold chart here actually doesn't look that great. Big old pump and dump. So it's important that gold stays above, to answer your question about gold, important now that it stays above 25.8770 in my opinion. We start to lose that, I think you could roll over it with other risk assets, barring nuclear war. Yeah, and Bitcoin didn't really roll over, right? It wasn't looking nearly as bad as ES. All right, let's see if there's any more announcements here. Powell says it feels that to me, and that the neutral rate is probably significantly higher than it was back then. How high? I just don't think we know. Again, we only know it by how it works. We only know it by itself works. Okay, he just word saladed that thing to death. Yeah, so basically it's like we're cutting a 50 basis points, but no crisis. And if you believe that, got some oceanfront real estate in Kansas to sell you. Today was very significant. I hope you guys kind of understand that. 50 basis point first cut, very significant, really bearish implications over the next couple of years for the economy. So you guys have to start thinking about, what are you going to do, even if you don't see it right now? What are you going to do when things get slow? You know, are you in a recession resistant, line of work, right? If not, if you're in luxury or entertainment, those things are going to get way slower. It's not happening yet, at least not in mass, but it's going to come. Powell's still taking questions. TLT, you kind of just as a long-term play, right? We said 88, 88 was a good level to get in at. And then we dipped to like 85 or 84, something like that. And we recovered 88. And when we did that, to me, that was very bullish because I like those bullish reclaims. And so I think anything, south of 90 at this point is, you have to continue. Now you can DCA in it because both Bob and I think this TLT is really going to start to move once we start to see that. Remember, I showed you guys earlier, I don't know if you guys saw that, or maybe you came in later, but we had that TLT ratio chart, right? So TLT SPX is on a weekly basis. Like, to me, this whole area here is basing. And if TLT outpaces SPX, which is what that means, if this chart starts to go up, that means that big money is getting out of equities and piling into TLT. And then TLT should start its run toward, you know, at least 150. And I think it could be almost as high as 200 based on just where we are in terms of the business cycle, right? And so, and I think rates can, because rates are so high right now, relatively speaking, you know, historically they're not very high, right? But relatively speaking, in terms of recent years, they're very high. So, and I think that if you look in terms of, like, if you get a recession every 5 to 6 years historically, and you haven't had one for 15 years, the odds are the recession you do get after 15 years will probably be longer and a bit deeper than people would like to see. And that's why I think TLT can continue to go up higher into those levels before the Fed finally cries uncle, and then we get, you know, that reduction or you get the quantitative easing starting to come back in. And once that starts to happen, the TLT trade's over, totally done. You cannot be in TLT if the Fed starts another round of quantitative easing. Pat yourself on the back at that point for listening to Bob and Phil, and get out. No. So again, we're just getting reactions off of what Powell is saying. We got negative ticks coming in. Now, I will say this: when Powell is done speaking and this market starts to roll over, then I think you got to get a little defensive here. Right now, you're going to see ebbs and flows until he's done. All right, so he just wrapped up. So let's see, do we dump or not? Not looking good. You don't want to see this market sell after the presser's done. So takeaway from the conference, the press conference, definitely looking at a series of cuts, albeit a recalibration ahead. But we have in fact begun the cutting cycle now. Okay, historically, guys, that means we are probably in for at least an 18-month bull market or bear market, maybe longer. But the next quarter could be confusing because the market can pump. So we get a pump before the dump, right? Larger cut was mostly about risk management. We don't think we're behind. You can take this as a sign of our commitment not to get behind. They're behind by design, but I think I think 50 basis points tells you all you need to know, that they're very concerned about the unemployment rate. The slowdown in the labor market bears watching, and we're watching. One note that wasn't unabashedly dovish was that it feels to me the neutral rate is probably significantly higher than it was back before the pandemic, when it looked like the real neutral rate might have been negative. So, anywho, there you have it. That's the Cliff Notes. So, in our view, right, we said run up into the rate cut, and then the rate cut would be a sell the news event. So this is what we're watching. Is this now turning into a sell the news event? You know, this next series of candles here, as we get into the end of the day here, we got another, 40 minutes, 38 minutes until the cash session closes. Are we going to start to roll over here? Now, this is the second time we're dipping under the announcement level. Okay, we should not be dipping under the announcement level if this market's really going to squeeze up off of the press conference and off of the decision. So this is a little bit of a concern, in my opinion, in terms of where we're headed over the next 24 hours. And to me, this is starting to slide over into bear country here. Griffin, I think that maybe, I don't know if we're going to get back down to 90, but if we do have a move back to 90, the TLT SPX chart I shared, that would take a nosedive. And I think if that's going to happen, and it probably would happen sometime in Q4, And you just have to look at that as a buying opportunity. Because remember, you're building a position in TLT. This isn't a day trade where you have to be really precise, right? This is a weekly chart. You're buying a dip on the weekly chart, and you're expecting that to go up over the next 18 to 24 months and head toward like at least 150, I would imagine. Adams, the maybe, but you know, they're not making it easy here, right? I want to see confirmation first. I don't want to guess where this is, if this is going to break the low or not. I want to see it break one way or the other. I want to see a decent candle under that, and then it's like, okay, now you can start looking at hedging to the downside. Will seasonally would say probably into the first week of October. See, they're again, they've negated the, like, obviously we're getting some stick saving going on down here, right? Because, you know, we came down here, took out the announcement low, came back, they tried it again, and they're getting a bounce once more. So they're really testing the ice here at the range reaction low, or the reaction range low, excuse me. So do we bust higher? This is a little area. We're just looking at microstructure, right? 1 minute chart. So this is this little area here, right? It's like your reoffer zone, right? So if you're gonna push back down, typically this is the spot where you're gonna do that. So if we start cracking above it, then you're gonna get back to the top of this range here, typically. And I think that's what you're seeing here. Yeah, all the stops got hit. There you go. So this market is not ready to go down yet. And we're getting another extreme volatility signal on Bitcoin, because we're whipping around here, up 61,375 down to 59,980, right? Just pretty big range here for these candles. So I don't see any reason yet to go short. It's flirting with it. It's flirting with a reason to go short. Now we're back to the midpoint of the range. Now, this could be a midpoint retest that gets rejected. That's possible. So if you're bearish, you don't want to see 5720 or 5721. 5721 would need to hold more or less here and then kick us back down. If we get that rejection back down, then I think you have to brace for this 5685 level to break. So now we get the battle for the midpoint, the battle for midway. Positive 800 tick coming in. So we got buy programs chasing the move up. Guys, I'm going to get a quick drink. Give me a couple minutes. I'll be right back. Okay, I am back. Well, we're right smack in the middle of the reaction range here, guys. So Powell's done. Now, one thing you guys might have remembered on previous streams, we talk about the 330 move. So at 330, you mark off the level the price is at on the 330 open. And typically what you'll see is some sort of round trip back to that. And on rare days, I would say 10% or less of the time, they don't complete the move back to the 330 open. And what will end up happening in that situation is you keep that 330 level on your chart, and they'll get it later in the night. Like, so in futures, right? Futures close at 5 p.m. Eastern, reopen at 6 p.m. Eastern. If you're trading the micros, which is only like $50 a margin, and it's I think it's $5 a point, I believe it is. And you know, you can play for that move back to get back to that level, whether it's from below or from above. They'll typically complete that later in the Globex session. And now we got negative ticks coming back in. So remember we talked about maybe this is just back testing the midpoint. So at this point of the market, you know, it's starting to look like that. You know, we come back down here again 2 times now, trying to stab this level down here at 57.10. So we want to see 57.10 break lower if this is really what they're doing. Otherwise, what we're going to do is just get another rotation back down here, and then we'll come back up to this 330 open level at 57.17. If we don't get back up there, I would say the way this price is developed down here, that would be fairly significant, because it's a really strong magnet most of the time to get back to that level. Let's see if whoever's defending this 57.10 level is able to hold it up here as they push back down on this. And see the negative ticks are coming in, so some broad-based selling in the New York Stock Exchange stocks. All right, so see the flush there. That's a bunch of stops getting hit. Who's winning, right? If you look at this range reaction, right, as, you know, basically value, right? Upper part of this range is expensive. Lower part of this range is cheap. And the bears are winning because you're spending more time in the cheap seats, right? At the 50% and lower, right? That's where all your price action is starting to develop. And then if you go further into that, if you look at, you know, we can even turn on volume profile, visible range. Visible range volume profile. Or if we turn that on, we can make, let's do row size. I think we go row size 230, is it? Yeah, get a little more granular. But essentially, this is like, you can kind of see it too between the previous weekly high, right, and the announcement. Look at where all your value is right there, right? So this is expensive. This is cheap. You buy under here. It's been giving you a nice return trip back up into value. Most of the time with trading, it's all about these rotations. You know, market makers, you know, this is where all your profits come from, rotating these value areas. What's called market profile, right? Those are market profile concepts. These are a different type of chart. They call them TPO, time price opportunity, and they break the market up into 30-minute segments, and then they stack those segments out from left to right. So it's a different looking chart. we got negative ticks coming in again. So if we look at, let's take a look at our markets. Wolf continued to deteriorate here. Bitcoin's trying to hold up. I mean, it's doing, I think Bitcoin's holding up really well considering. But if these markets do not start to recover into the close here, and I'm starting to lean toward they're not. Wolf might be, we might have to take a graceful exit on Wolf here. I'm just not feeling the love here. What do you guys think? Are they going to roll this market over or what? Do you think we're losing it here, or are they just trying to trap bears down here and we're going to get a little end of day squeeze? Remember, this is a 330 round trip, right? So I do expect this to go back up to this 57.17 level, right? So this, at this point, you get a little move back up here. The trade would be risking this low, and you get the move back to the 330 open up here at 57.17. Like I said, if they don't get that, that's kind of rare not to get the return trip back up there before the end of the session, or even I've seen it happen where the cash session closes and the futures kind of creep up there after the fact. But before the futures day session closes, if you don't get back there, that's usually happens less than 10% of the time. So I'm not going to be at all surprised if they push this back up to 57.17. Then from that point, you're going to look for, once you get one of the round trips done, I say, okay, it's that's out of the way. The market's free to roam, is what I say. So if we don't get back up there today, I take that as a sign that we got issues. This just feels like they're just munching and munching and munching on this support here. And we're going to get might be a case where we get one ugly 1 minute candle that just breaks all of this right here, right? And it just flushes out. So just watching here, guys. This is kind of important at 57.10, kind of stonewalled the move there. You see we came down to those 2 wicks, right, on the 1 minute chart and killed it. So this actually not looking too hot for the bulls right now. So if we end up flushing out here in the last 20 minutes or so, breaking this down, I think then, to me, guys, that's just going to be the probabilities are we're going to go down. All right. It's going to be a sell the news event. And going forward, if they're going to negate that, we have to get back above the announcement level. And you're going to want to see a daily close above this 5,700. Otherwise, we're probably going to start probing lower as we progress beyond this week into the end of the month. Charles, you can't really say that. We've seen some really nasty sell the FOMC day happen, so you can't really say for sure. I kind of think though that we won't see an obvious sell today, but we could start seeing it manifest over the next couple of days. Now that high though, that being said, the high that we put in on the reaction could be the high. So when you look on the chart, it is a sell the news day because we didn't take the high out. Very, very possible. Very possible we get a gap down tonight. Also very possible if we do not get this 330 open, that we do get an overnight rotation up to 57.17. It's going to look like, if we do get that, it's going to look like things are, going higher, and all we're doing is just tagging that level back out. Does that have to happen? No, but it does happen a lot when you don't complete this round trip. And it still could complete. I mean, we still got 15 minutes, but this is starting to look more and more like one of those rare days where they don't do it, and that's just not bullish. It's really not bullish. Sorry about that. Yeah, so another stab lower. Okay, this isn't good. Okay, taking out that low again is not good. Still getting some trappy price behavior, but I'm going to say that you're going to have to probably look to get defensive going into tomorrow. I think a gap down tomorrow is a distinct possibility, as you posted there in chat. So So not a whole lot to say here, guys, other than we're kind of watching them slowly walk this market down. We're not getting that 330 round trip. We're not above the previous weekly high. We're not anywhere near the top of the range from the reaction of the 50 basis point cut. Looking more and more like sell the news. More negative ticks coming into the market. Coinbase Premium not looking hot. Not looking good, folks. Not looking good. Now we do have a 50 algo that fires off. We call it the 50 algo. It fires off at 350, and you'll see it in the price action. There's a quick little reaction. Initial reaction was up, but they're selling it still. So the next one we have is at 355. So you'll see another candle reaction, little volatile reaction over here. Now we're starting to get acceptance below the initial reaction range low. Okay, so this is okay if you trap there and you come back up. And this is good too if you reject that move and you get all the way back up. But then this just turned into a mid-range retest that sold off. Remember we talked about this could just be a back test of the mid-range. Sure enough, that's what it was. And so, you know, now we'll see if we can start getting more and more acceptance below this. You still could get a trap down here. That's not out of the question, but it's looking less likely. So there is a, you see this 1 minute inverted hammer, right? So we test back into the bottom of the range. You know, if you're bullish, you want to see that accept and get these guys trapped. You don't want to see that where you get a reversal 1 minute candle because this range was finally lost after 1-2 attempts, right? Well, actually 3, because if you count the range reaction low, somebody was holding that there. And then you had the second, third test, fourth test, we're losing it. If you're bullish, you really want to see this grind higher. Right now, this isn't looking that great. But if you do start breaking back above this 56.89 level, then you get another stick save in here, probably pushes back up. There's big battles going on in here, guys. Big money battles. We have another algo that's going to fire off here in a couple minutes. It's going to be the 355 algo or the 55 algo. And these are just like end of day big market buy or sell programs that fire off depending on what the orders are, you know, the different reallocations in funds and 401ks and things like that. A lot of different things go into that. And it's either a net positive or net negative. But at this point now, you want to see this market squeeze up, right? You want to see this turn into a trap underneath the range low because we've had several closes down here. You want to negate acceptance there, and you want to see this squeeze back up if you're bullish. If you're bearish, then this is a very short-lived move up, and this rolls back over, and we start cracking, and we take out these lows. If we pretty much end the day, we got 5 more minutes left in the cash session, but if we end the day down here, I can just tell you guys, ending the day at the lows of the reaction range is not bullish. It just really isn't. If you look back on all of the various reactions, at the very least, you're going to see more follow through to the downside. Could it come back up later and get back over the announcement? Yeah, it could. If it does, you have to be bullish at that point. But I would say that probably we're going to see more follow through to the downside if this day, unless they just squeeze this thing in the last 5 minutes and we end up somewhere up here, right? Then it would negate everything I just said. And then you have to flip long. You just have to go with what the market's giving you. But this is really not finding a bid here. This was a decent opportunity to trap these guys here, right? Okay, here's the 55 algo. All right, so we'll watch this candle. Initial reaction straight back up here. 5 points or so. So they have an opportunity to squeeze these guys. These guys are all trapped under the range low. Can they get the job done? The 55 algo is failing to see any follow through here. They're selling it. And then, of course, the last 5 minutes can get fairly chaotic because you have a lot of shuffling. There's a lot of implications from today, a lot of positioning implications. So this might be an entertaining final 5 minutes here into the cash close at 4 p.m. Eastern. See what we get. It's not looking good, bruv. It's not looking good. Griffith, yeah, you know, those things are awesome, and I think they're going to continue to be awesome. If volatility stays up, they'll be awesome, right? Volatility creates yield, especially on those products. Holy cow, the yen is going to be very sensitive to our rate cut announcements, and that's all that is, okay? And then the BOJ announces tonight too. So there's going to be overnight volatility, make no mistake. I just don't like this, guys. I don't like the fact that we're battling here at the lows of the reaction range. If you guys have been watching our FOMC announcements that we've done over the last couple of years doing these live, this isn't a bullish reaction, right? Hanging out the bottom of the reaction range is not indicative of a market that wants to expand higher after the announcement. So it looks more and more to me like a sell the news event. I would make a note of 5755.75 today. That high could hold for a while into the end of the month potentially, right? I think that I would favor that more if we saw follow through tomorrow and also follow through into OPEX. So if today was it and you get that sag into Friday, I don't really think next week's going to be bullish. I think you're starting to get I mean, this would be just classic textbook run up into the news, sell the news, right? Classic. And if you look here, this is the news. And what are we doing? Well, you know, it's messy, but we're selling, right? We're going down. Trend is down. And we're going into the final couple minutes here. So, yeah, this isn't the reaction bulls would want to be looking for here. Yeah, guys, they had an opportunity to trap there, did not trap, right? So I think it's time to exit Wolf, give this market some. I think that's the hedge. I think unless you don't want to sell your Wolf, you can maybe buy put insurance, but I think you have to be defensive here off of this reaction. And if it sets up, you know, just another buying opportunity going into the end of the month, right? Reload. And that's where I would be, to me, that's a very interesting spot. If we do get that sell down into September, the end of September, to me, that's a very interesting spot for everything. Bitcoin, gold, crypto, you know, stock markets, because don't sleep on that election rally. You know, that's a very strong seasonality that happens almost every year, especially when you're up into the Q3, right? And when the third quarter is up nicely on the year, they roll that wealth effect over. You want to maintain a certain percentage gain, and that requires buying more, putting more risk on to maintain that ratio. So, and then if the market's, it's just a wealth effect at the end of the year that happens every time we're positive. So the only time that would be negated is something breaks in the system, right? You get some black swan event, some COVID event, right? That would negate that. But otherwise, all things being equal, you are going to get that positive push into the end of the year. It's just the way the markets work. Whether that makes sense in terms of the macro numbers and the macro employment numbers and things like that, unemployment rate, you know, trust me, that stuff can dislocate for a while. And that's what screws people up, because the market is not the economy. The market is a levered instrument of forward earnings and things like that, which is, you know, which matters in the terms of the economy. Forward earnings matters a lot, but there can be a major lag, right, and disconnect at times. So, but I think eventually that all catches up in Q4 and into Q1. All right, guys, well, that's going to do it for me. That's the cash session close and not the reaction you were looking for. We did not get a 330 round trip. To me, that says that you just want to watch to see if they do sneak this up overnight to tag that level potentially. But at the way it stands now, we've got to brace for and be very defensive for more downside push. So again, we have the BOJ announcement tonight. That's going to affect the dollar. So there's going to be some volatility overnight. So if you guys want to watch those charts, you can chart either ES1 exclamation mark, which is the CME E-mini, S&P 500 E-mini futures. Or the other one is you can chart the US 500 instrument in TradingView, which is it's a little different level on that, because that's tracking the S&P 500 level, the cash level. And that, unlike the SPX, that one will track overnight as well, but it's different than the the futures chart. The futures chart, you guys can, we can trade that with micros, or if you're got a big account, you can trade the E-minis, which is $50 a point versus $5 a point on the micros. But if you guys are curious on what the market's going to do, you can chart either one of these instruments and follow that action overnight. All right, guys, that's going to do it. If you're interested in our stuff, check it out over at tradegenius.co. Get in the room with me and Bob. You can follow his Yield Max plays. You can follow my crypto call. And love to see you in there. Otherwise, thanks for watching, guys. We'll see you guys on the next FOMC live stream. And we will have another podcast out. Not today, but we'll have one out on Thursday. So we'll see you guys then. Take care.
Thanks, Phil. Thanks, everybody. Bye-bye.